For 30 years, economists have been warning that Japan was about to collapse. For 30 years, they were wrong. But on January 20th, 2026, something happened in Tokyo's bond market that stunned traders who had spent entire careers watching it. And this time, it might actually be the beginning of the end. Japan is the third largest economy on Earth, home to 125 million people, a technological powerhouse, the birthplace of Sony, Toyota, and Nintendo, and it is sitting on the most dangerous pile of debt any developed nation has ever accumulated. 236% of GDP. To put that in context, the United States, which everyone worries about, is at 153%. Japan is nearly double that, and in 2026 the bill is finally coming due. But here's what makes Japan's story different from every other debt crisis in history. Japan didn't get here through corruption or war or incompetence. It got here by doing everything right and then everything wrong. After World War II, Japan was in ruins. Two atomic bombs, firebombed cities, an economy shattered beyond recognition, and then one of the most extraordinary recoveries in human history began. Fueled by American investment, Japanese engineering, and a national work ethic unlike anything the world had seen, Japan rebuilt itself in 2 decades. By the 1960s, it was growing at 10% per year. By the 1980s, it was the second largest economy on earth. Japanese companies were buying American landmarks, Rockefeller Center, Pebble Beach Golf Course. At its peak in 1989, the land under the Imperial Palace in Tokyo was worth more than the entire state of California. The Tokyo Stock Exchange was on fire. Real estate prices were doubling, then doubling again, and then it all stopped. On December 29th, Nikkei stock index hit its all-time high. The next morning, it began falling, and it didn't stop for 13 years. The Japanese asset bubble of the late 1950s was one of the greatest financial manias in history. Banks had lent recklessly. Corporations had borrowed insanely. Real estate had been bought at prices that made no mathematical sense. When the Bank of Japan finally raised interest rates to cool the frenzy, the bubble popped catastrophically. The Nikkei lost 80% of its value over 13 years. Real estate prices fell 70% and kept falling for 15 years. Japanese banks drowning in bad loans stopped lending. Businesses stopped investing. Consumers stopped spending. The economy entered what became known as the lost decade, then the lost 2 decades, then the lost 3 decades, then the lost 3 decades, and throughout all of it, the Japanese government did what governments always do when their economy stops growing. It borrowed money and borrowed more and spent more for 30 years, until the debt reached 236% of GDP, the highest debt to GDP ratio of any developed economy in human history. For decades, Japan seemed to defy gravity. Interest rates near zero, inflation almost non-existent. The debt kept growing, but the system kept functioning. Economists called it the Japanese paradox. How can a country owe this much and still survive? The answer was a carry trade, and in 2026 it's unwinding. For years, global investors had discovered a simple trick. Borrow in Japan, where interest rates were near zero, convert that money into dollars or euros. Invest it in higher yielding assets elsewhere. Pocket the difference. This became known as the yen carry trade. At its peak, an estimated $4 trillion of global investment was funded by cheap Japanese borrowing. $4 trillion balanced on Japan's zero interest rates. Then in 2024, the Bank of Japan started raising rates, just slightly, just carefully, but it was enough. In August 2024, the carry trade began unwinding and global stock markets fell 10% in a single week. Then on January 21st, 2020, Japan's 30-year bond yield surged above 4% for the first time since the maturity was introduced in 2007. The largest single-day bond market move since 1999. Traders who had spent entire careers in Japanese bonds stood stunned, because Japan holds more US Treasury bonds than any other nation on earth. And if Japan is forced to sell those treasuries to save its own bond market, US interest rates spike, the US government's borrowing costs explode. and the debt crisis that has been building for decades in America gets triggered by Tokyo. Japan's story is the most important financial warning the world isn't listening to. A nation that did everything right, rebuilt from ashes, became a global powerhouse, led the world in technology and manufacturing, and then spent 30 years borrowing its way out of a problem that couldn't be borrowed away. The debt is now so large that Japan's annual interest payments exceed its defense budget by a factor of 5. The yen has lost more than half its value in 6 years. And the bond market, the foundation of the entire system, is cracking. What happens in Japan does not stay in Japan. $4 trillion of global investment is tied to Japanese interest rates. The largest foreign holder of US debt is Japan, and when that system breaks, the shockwaves will reach every corner of the global economy. History has a name for this pattern. It's called the end of the miracle, and every miracle eventually ends. Subscribe to Empire Collapse, because what's happening in Japan right now is the preview of something much, much larger.